Everybody, welcome to Own the Chaos. My name is Brad. That guy over there is Fat Man Zoom. The stock market is crazy and chaotic. We made it our mission to help you guys own it. And Fat Man Zoom, you know what the drill is. Let's hit off with the starting five.
Yeah, starting five, we got Sam Cisneros, Sean Ethier, Changing Frames, Mysterious Gal, and Jason Barub. You guys are the starting five. Welcome to another live stream at Own the Chaos. Man, Wednesday already, man.
It's September 1st. I can't believe it.
Yeah, that's wild. So if you guys are new to the channel, this is Own the Chaos. I'm Fat Man Zoom. That's Brad. We are live every Monday through Thursday, 3:30 p.m. Eastern time, where we talk about what's going on in the market that interests us. And on certain days like today, we'll have earnings reaction. So when the bell closes, we'll turn our attention to earnings, which today we have the likes of Chargepoint, Okta, Asana, among others. So it should be a good day for earnings. Chewy as well, we got on the radar. Is there a particular one? I think I already know the answer to this that you're excited about.
Yeah, I don't know if it's excited, but definitely the most interested would be Asana, just because of how much this has gone up. We're talking 200-300% on the year this year for Asana, and so they have another earnings. I'm a little bit apprehensive because some of the ones that we've seen that have gone off have sold off of the buying the rumor, selling the news type of deal. So I'm wondering if Asana is going to suffer the same fate, or are they going to come in triumphant and continue to go higher?
Yeah, so we'll definitely get into those. I mean, Asana's one of my favorite companies out there. I'm also really interested in ChargePoint. They're sitting at a very interesting level, and they're actually set up and poised to potentially go off after earnings if they say the right things, but highly volatile. So we'll see what happens. And we'll get into all those things as we get closer to the bell. But we got a couple other things going on, topics we'll get into in the general market. But how's the market going for you today?
It's been all over the place. I was red this morning, then I was up like $1,000, so I'm around 2.5-3%, and then now I'm back to being flat. Now I'm just barely green, up about $100 on the day. So a lot of mixed stuff going on. I think it's just the market kind of digesting over the last couple of weeks the massive move that it's had. I mean, big tech is certainly continuing to roll. We saw Amazon like fly over 3,500 at like 35, I think 27 is what we saw. Now it's pulling back down to close to 3,500 again. So just big moves out of big tech. But for me personally, it's been kind of flat.
Yeah. Online gaming's been decent. Penn's still hanging on above that 80 mark, which has been nice.
Yeah.
Airlines sold off a bit when they were doing decent this morning. But yeah, I mean, you know who had a really good day in the beginning and then sold off? I thought it was going to run was Apple. I thought Apple was on its way to make a move and kind of sold off a little bit. But all in all, not a bad day. Some good stuff out there, some good opportunities as well. And Zoom, wouldn't you know, went back below 290. I got my order filled. I thought I was afraid it was going to run away, but I got my order filled on that. So it's definitely been an interesting day. But hey, we've had a great year thus far in the overall market, so you can't win them all.
Yeah, I mean, it's we'll see. I mean, it's going to be interesting for September, and maybe this could be a part of tomorrow's discussion. But like, you know, just a lot of the fears about September being the worst month. But there's some interesting statistics out there too that show that maybe September isn't going to be such a bad month. But I think there's also, you know, a couple of things that are out there that may cause a market sell-off. But there's so much liquidity out there that it's like, where do you put your money to work? And right now it seems to continue to be equities and stocks. And so it's hard to find a bear case right now.
Yeah. Yeah, for sure. I mean, you know, there's still a lot of growth opportunities out there. I know people still have some concerns about inflation, potentially Delta variant. There's definitely things to keep an eye on. The truth of the matter is, and probably good from time to time for us to discussed this on our channel, is one of the main reasons why we try to look at stocks that are a little bit more reliable, longer standing, blue chip stocks that are at discount. So if they do come down, if there's sell-offs, rather than try to predict sell-offs, which historically, Brad, data, you can make numbers say whatever they want to say. If you want to go find out why September is going to be awesome, we can twist the numbers to say why it's going to be awesome. Every time the average temperature is above 90 degrees going into September, we tend to see the market run. So like there's always things that you can create. But, what we're really about is just keeping our money at play, making sure that we have cash on hand, continuing to just add in our monthly accounts. And then when the opportunities come, take them. Apple's not going anywhere. So if it has a down week, month, year, you add on to it. And we tend to try to look for those opportunities for the big boys. So we're not worried about, a company that's just not going to be around in 5 or 10 years.
Yeah. I mean, and this notion that everybody's waiting around for this market correction is kind of crazy, because even though the S&P, the Dow, the NASDAQ, I mean, the S&P saw another record high today, intraday. Even though they've continually moved up, we've seen corrections in areas of the market. I mean, we just got done talking about energy, about how that had a pretty decent pullback, 30% over the summer. And even, we've been talking about Amazon, Apple, and even Netflix, which made a monster move today as well, that corrected and are now moving back up. And those stocks are so heavily weighted in the S&P that even though we're seeing some pullbacks in some other areas, the S&P is going to continue to go higher just because of how much weight that they carry in that index. So I think that if we look at just the indexes themselves and try to determine a correction, it's nearly impossible. But when you look at certain sectors that have corrected, that's where you kind of look for areas of opportunity. And that's what we've done. We've gotten into energy. We've gotten into some of the reopening plays. I mean, we just got done talking about Penn. And so those are going to be the areas that you definitely want to look for to put your money to work instead of worrying about when this big overall correction is going to happen.
Yeah, that's a great point. I mean, there's stocks we've talked about time and time again that are still undervalued in our eyes. And so when you think about that, rather than trying to predict the overall market, which most people do a horrible job at. I don't know anybody who actually does a great job at that. Because if you think about the last couple of crashes, they're really almost impossible to predict. Yeah. And so when you look at the overall market, it might be challenging to predict a correction. And what for? You're trying to predict a 5%, 10% correction? Right. Well, there are stocks that one could say have 100% upside, 50% upside. We talked about Disney has at least 15, 20% upside, right? So if you're looking at from an industry perspective or even just an individual stock perspective that's lagging, there's tons of opportunity out there. There's tons of good companies that you can get on board with that should do well. And we've talked about them a lot. We bring them up in our daily watch list, which give this opportunity to shout out our daily watch list. Every morning we give out 5 stocks. We send out 5 stocks that we're watching, give a fundamental breakdown, a technical breakdown for free. So every Monday through Friday, 9 a.m. Eastern time, we send those out. If you guys are interested, click on the link in the description. It'll take you to onthechaos.com for that free link. So definitely check out our free watch list. We tend to do really well on those. Man, we're almost 400 watch lists in, which is pretty crazy.
I know it is crazy that we've been doing it this long already. Speaking of stocks that have corrected or that have gone up, and you kind of look at this buying high and selling higher. I've been playing around with options a little bit, and I mentioned that I'd sold some puts in Ford. Ford's a perfect example of one that it's still up 50% on the year, but it had a pretty decent correction from 1646 all the way down to 1309 where it's at right now. And I actually sold some puts on this. I'm waiting for them to expire next week. If they just so happen to expire, so be it. I think that this is going to be something that if they do expire and I end up having to take shares on, I'm very comfortable holding Ford shares at $13. You guys can see that I have this 13 that sold puts at 13. So if this ends up expiring, I have to take on the shares. I'll get assigned them, and that's fine by me. And this is going to be another prime example of something that, even though the market hasn't seemed to have corrected, something like Ford is correcting. And this could be a really good opportunity going into the end of the year and maybe even to the beginning of 2022.
So when you say selling puts, is that like shorting when you say you're selling to short?
Sort of. So when I sold these puts, I took on a credit. So essentially I sold five contracts at $13. So when this expires, and if it's below 13, I'll have to more than likely take on 500 shares of Ford, which is fine by me because I don't mind owning it. But if it closes above this, whatever the credit is for, I'll still get somewhere around $160. So this is kind of like more of a conservative play for Ford. Gives me an opportunity to get an entry if it expires. The expiration date's on September 17th. So if it does that, then I kind of get a decent entry, especially if it comes down to 1260. That would be great. But it just gives me an opportunity to either get a decent entry on Ford or just take the money from the puts in and of itself. So it's not really me shorting it. If I was shorting it, I would have bought the puts, but I sold them instead.
Okay, so you're banking on, when you sell puts, you're banking on the stock to go up?
Yes.
Okay, so you may not know the answer to this question. I'm just curious because when I think about calls and puts, I think about the stock going up, stock going down. I didn't realize you can sell them. So just curious, why would you not buy calls? Is there like more potential value in selling puts?
There's just greater risk. So if I just, and shout out to Don, I just saw him
Greater
show
risk
up.
for which one?
So there's greater risk for buying calls because then they could expire worthless by the time the expiration date comes up. Like looking at Ford, this is something that I actually was looking to own. And rather than just buying the shares, this kind of gives me a little bit of insurance. So if Ford ends up by September 17th, which is my expiration date, if Ford is below $13 by that expiration date, then there's a pretty good chance that I'll more than likely have to take on these shares. So then I'll be owning shares of Ford. I'll be owning 500 shares of them. And then there's that difference, that $160 difference thereabouts. So, let's just say it comes down to 1250, I'll be down a certain amount of money, less the $160 because I've already got that money that as far as the credit's concerned. So by selling these puts, I was already given a $160 credit. And then if I end up having to take the shares on and I'm sitting at a loss, my average is actually going to be halfway decent because it'll be at $13 less the $160 credit.
Gotcha. Yeah, I mean, I've tried. I continue to try to understand options. I'm just not yet comfortable, clearly, and like not knowing that you can sell puts. It is really hard for me to wrap my head around.
It's definitely like learning a foreign language for sure. And it's still something that I'm sure, like, this is the first time I traded any puts in 10 years because I was in the same boat. Like, I'm just like, whatever, I'm just going to buy them straight up, make it easier. This actually gives you a little bit of an insurance policy because best case scenario is you walk away with $160 because that's what the credit was for selling these contracts. Worst case scenario is you have to take on the shares and you might be sitting at unrealized, in an unrealized loss if it's lower than $13 by the time the expiration rolls around. But the insurance is that you at least got that $160 credit just for selling them in the first place. And so even though you might be down, it wouldn't be as being as red as you were if you just bought them straight up at $13.
Yeah. It's interesting because outside of Don from Don Francho, obviously everybody who, like, a lot of people who did options raked last year.
Yeah,
I mean, pretty much anything you were in the market. I don't know many people who've like. I know there's just such wild swings. I've seen some people make money, but also lose a ton. Outside of Don, I haven't seen anybody consistently. I know there's ways to like hedge, which I think ultimately when I get into options, it'll be from a hedging perspective, not necessarily like solely in options.
Yeah.
But yeah, there's definitely a lot there, and it's all the like strategies and
Yep.
well, it's just so much when you get into it. It's crazy.
Yeah, there's
Yeah, but
definitely
credit spread.
yeah, there's definitely obviously ways that you can just, lose all of your money and even owe money. But this is actually something, and you would probably like this because, it's a way to either generate income because you're going to get the $160 anyway, or whatever the credit is. And then, if it's on a stock that you like anyway and it expires below the strike price, which is the $13 in this case, you're going to own the shares, and then you can either choose to sell them for a loss or hold on to them because you got a really decent entry on it. So like, if it was Apple or Amazon or whatever, there's a good solid companies. If you're doing it with a penny stock or something like AMC, that's when people get themselves into trouble.
Yeah. Well, yeah, I mean, I get how it works. I just not sure how it works or how it's successful in a strategy. So looking forward to hearing more about that. How has it gone for you thus far? Have you been successful? Have you made money? Are you still, is it just, you're just still in positions right now or what?
Yeah. So I'm still in this contract. I haven't bought it back.
That's your first contract?
Yeah, so this is my first trade.
Okay.
My first trade on, in 10 years on options, which is so I ended up selling this put, or selling the put in five puts in at 13 strike price with the expiration of September 17th. So 2 weeks from now, we'll see how it goes. Right now, I'm up on it slightly because the strike price is at $13. Right now, it's sitting at $13.10. So I'm only up like $20 or something like that. But we still got time on our side. If this continues to go up, like I said, best case scenario is I collect $160. It's basically free money, or I get a relatively decent entry on Ford if it's below that in a couple of weeks.
Yeah, gotcha. Vinay said, Don said, don't buy it back, exercise it, and then we'll sell calls against it. I was trying to get a little convoluted.
You can do that too, which is, and he's explained this to me too, and I've been really trying to study up on it, but it's called a wheel strategy. So like I'm really starting to understand the selling of the puts part. It's the calling them back, and then the other half of the wheel strategy that's really kind of got me thrown for a loop too. So like again, it's like trying to learn a foreign language, but we'll get there.
Yeah. Vinay said, should I tell them about the $1,000 move on 1,000% move on Amazon contracts? Maybe. I don't know the answer to this, but you remember when Amazon was sideways for a year?
Yeah.
I wonder how that did for options, because I feel like sideways is when an issue becomes with options. I could be wrong, but Amazon definitely has been a monster, but we've been waiting for about 8 months for it to be a monster.
Yeah, it depends on what your strategy is for something like Amazon that does move sideways. Because if you're just looking to own shares of it, kind of like in the case of what I'm doing with Ford, if you're just looking to own shares of it, then there is a way that you can do it, safely. But if you're trying to, go crazy and play with the decay of contracts, then that's kind of like when it gets you in trouble moving sideways. It just, everything expires worthless, and then you just end up losing money. So yeah, there's ways to go about doing it. You just have to know how to speak the language, which I'm still slowly learning how to do.
Nice. How many people we got in the house?
We got 100 folks in here hanging out, watching, and learning about our beginner struggles on options so far. We got 27 likes. So if you guys wouldn't mind hitting the like button, we certainly would appreciate it. And we're going to be covering some of the earnings after hours today. We got Chewy, a Chargepoint, Okta. I forgot to mention Smith & Wesson as well. So that might be something to watch. Asana, those are all pretty notable this afternoon. Yeah. So what else we got?
Yeah. So Aunt Kathy's back in the news. Aunt Kathy has a new ETF. So Aunt Kathy's new ETF is ARK Investment Management's Transparency ETF. So it's honestly, it's a lot of like tech, a lot of the same stuff we've seen, but it excludes things like the vice stocks. You talk about alcohol, you talk about firearms, you talk about gambling, banking, oil and gas. So like it excludes those, but you have your fan favorites, you have your Teslas, you have your Salesforce, companies you would know. Their second ETF they launched this year, and I know we love Aunt Kathy. Um, is this something that you're actually interested in, or do you think this move by Aunt Kathy is just another way for them to generate revenue, and you just go into RK and forget it?
That's a good question, man. I mean, I think obviously it's a business move on their part as far as the fund goes, and it just gives them another area or another something else shiny for people to look at to take notice of. But I think still the mainstay is ARKK. You can look at ARCF and some of the other ones as well. So like a lot of people like the ARCG. So there's definitely options here, but at the end of the day, their focus is still disruption. So I think that, ARKK has just a well-rounded set of positions in that fund that give you that, if that's what you want. If all you want is disruption, and no matter what market it's in, then just go with ARKK. If you're looking for something specific in a specific sector, then maybe it makes sense. But the transparency ETF, I don't know. I'm still trying to figure out what exactly the identity is here with this. Because remember, what was it? Was it ARCX, the space related one? It had some stocks in there that weren't related to aerospace at all. So like, there's definitely some of these ones that I'm looking at and just kind of scratching my head trying to figure out what's the point in buying this if there's securities in there that don't make any sense to what the theme of the ETF actually is.
Yeah, I think it's really for loyalists who love,
Yeah.
they want their money managed, and it gives them a few different options. They feel like they're doing something a little bit different, especially if it's in one of the lanes. ArcX was the one that was also launched this year, and it was there was some stuff that didn't make sense. It also had other ARC investments inside of it, which was also a little bit weird. And that's why my thought process went to they're trying to just make money. And, not that it's a bad thing. I would probably do the same thing, add more funds, more money comes in. But, I think the best value from ARC outside of ARC K, and if you just want something, a fund that you trust and that they are really open about what they're doing and what they're getting in and out of and why they do their due diligence, I think you could leverage their ETFs by just looking at what they have and doing your due diligence on some of their top holdings. So you're leveraging their think tank and you're almost getting a little bit ahead of the game. And then let's say you look at the top 5 holdings in genomics and you're like, oh, hey, I don't know this company, look into it more. I think it could serve more as a filter for the stocks you look at, because there's so many stocks out there. That's what I actually like ARC for.
Yeah, absolutely. And I mean, just looking at the stock right now or looking at the ETF, this actually looks pretty darn good. It was pretty rough there in the I guess middle part of the year, and it started to move back around. ARC has disruptors in there, but they also have Apple and I believe Netflix is in ARKK. So we've seen some monster moves out of the FANG stocks, and we think that they're going to be one of the leaders in the market leading into the end of the year. So it'll be interesting to see, if you just want exposure to big tech and disruptive technology, ARKK certainly could be in that conversation. I mean, we just saw that they bought more Zoom down here in the 290s. I think it was $50 million worth. Just the ARKK did. So, if they start to make their way back up, start to bounce off of their strong corrections, this could definitely be one to just consider owning, especially if you're not that much of an active trader. This is a ETF for an active trader that doesn't want to actively trade. So it's definitely one to consider.
Yeah. We'll definitely keep an eye on it. And, Kathy's been hard at work. I think you told me she just scooped up some more Zoom on the dip, right?
Yeah. I just mentioned that. So $50 million worth of Zoom she scooped up under $300.
Sorry, I was totally distracted.
It's okay.
Awesome. Well, we'll definitely keep an eye on this and give you guys more information as it comes. Let us know in the comments, which is your favorite Aunt Kathy special? Which ETF do you like? Do you lean towards? Don't forget to like and subscribe, guys. Moving on. I wanted to bring a stock to the table that seems pretty basic on the surface, and that stock is Visa. But Visa is actually making some interesting moves, and it led me into a conversation of NFTs. And
Yeah.
I'm maybe setting this up a little bit differently, but um, NFTs and these companies that are making acquisitions, trying to make moves as far as NFTs are concerned. And, you know, if you believe that NFTs are the future, where would you go to benefit off of that on your everyday stock? So you don't necessarily want to invest directly in NFTs, but you want to basically take advantage of the waves. What stocks would you be looking at to benefit off of NFTs?
That's a great question. And we just briefly talked about this before coming on air, but you know, you mentioned Visa, which is something that I never really even considered. But that's certainly one that you could definitely take a look at. Nvidia, I think, has the strongest argument as far as like, you know, big cap tech, big cap stocks, major companies, and then DocuSign as well. You know what I was thinking too, as well, just like off the top of my head, you know, PayPal. If we're having a conversation with Visa, it could be PayPal. Square could also be in that conversation.
Yeah, I mean, I think you start with certainly the fintech that are around currently.
Yeah.
You got your Squares, you got your PayPal, Visa. A lot of these companies now have a position head of crypto, head of blockchain, whatever their focus is. But if they're going that direction, the conversation's also going to include leveraging NFTs.
Yeah.
Nvidia's obviously making chips for blockchain, DocuSign. You could totally see them leveraging NFTs as well. But it'll be really interesting to see who ends up on top. Obviously, we'll probably have some sleeper companies, but to me, having companies, obviously niche is nice, but like they have cash on hand. I think that's one of the things you're looking for in a company. You have cash on hand. They could take some chances. They could make some acquisitions. They can build teams around these type of projects. I think bodes really well. I think DocuSign is probably one of the more I don't want to say underrated stock, but we don't talk about it enough. And I think it has huge opportunity within the blockchain world in NFTs. And however that world expands and the things it gets into, even things that don't even exist right now. So it should be interesting. And we've talked about smart contracts as well and how that's a logical lane. And if I'm DocuSign, I'm doing anything I can to leverage that.
Yeah, in the world of NFTs, the possibilities are really endless, and it's really as hot as it is right now. It's really just the beginning. I mean, did you see that quote unquote digital rock that sold for $3 million as an NFT? Yeah, it's literally just a picture of a rock. Someone bought it for $3 million. It's insane. So once that kind of crazy stuff, I guess, loses its hype a little bit, I think that when we start to look at more practical things with NFTs, and you brought up a really good point as far as smart contracts, house deeds and insurance policies and all kinds of stuff could be in the form of NFTs, just a digital footprint, if you will, or a fingerprint. And DocuSign certainly would stand to benefit from something like that. And we look at the stock right now; it's obviously made a huge run. They have earnings on Thursday, tomorrow after hours, so we'll certainly be keeping an eye on that. Make sure you tune in at 3:30 p.m. Eastern time to get our coverage on this. So it'll be interesting to see how this plays out. But long term, DocuSign is going to continue to rip up for a lot of reasons, and NFTs is certainly could be an argument you could be making for that. One point that I did want to bring out as far as Visa is concerned is that we had just got done mentioning about how the market hasn't corrected and all that good stuff. Visa's dropped 10% from its highs. So you could argue that this is also a correction. And if NFTs continue to become more a part of the conversation and Visa continues to get into this game, then that certainly could be another bull case for the stock on top of everything else. But this could potentially be a really good opportunity for Visa in general. If you're just looking for a nice steady stock that continually goes up, it's sitting right at support at 230. I like this where it's at as well. This is also on our watch list this morning, Batman Zoom.
And to give two other stocks that maybe a little bit of a surprise, or ones that I would bring to the table. Talk about a Facebook. Facebook
Yeah.
is a company that's trying to go beyond just ad revenue, social media. Obviously, they want to be a leader in the AI space, the virtual reality space. Oculus is certainly doing that, potentially glasses, all those things.
Yeah.
With their network, and the fact that, to be quite honest, I'm not sure with Instagram that you need Facebook and what Facebook brings in the long term. But if that became like a social NFT platform, that would be really interesting. And also a company, Squarespace, a company like a website builder, I feel like could lean into NFCs and create NFT selling platforms. If you have a specialization, I think that also is a sleeper opportunity for a company like that.
Yeah, absolutely. Couldn't agree more. This is definitely going to be a conversation that we continue to have, guys. And if you have your questions, of course, make sure you put them in the comments below, because this is something that we're continually trying to learn and pick up. But we certainly want to hear from our community as well. So make sure you're leaving comments down below. We would love to hear from you, and also be sure to hit that like button, because if you like NFTs, you're going to love this channel, because we talk about all kinds of stuff, investing and related. Right now, we have 103 of you guys in here hanging out. The market just closed about 2 minutes ago, 2 minutes ago. And we are keeping an eye on a couple of stocks here as far as earnings are concerned. We got Chewy that's reporting, ChargePoint, C3 AI, which I saw a couple of people mentioning, Okta, Smith & Wesson, Five Below, Viva, Asana. Just to name a few. I think the ones that we're focusing on in particular is going to be Chewy, ChargePoint, Smith & Wesson, Okta, and Asana. But if you guys see something pop off, of course, in the chat, make sure you're putting them down there. We certainly will take a look if we see something moving in the market.
Yeah, if you put a gun to my head and told me to tell you what Viva is, you might as well pull the trigger, because I have no idea.
I don't know what it is. Yeah, I don't know what it is either. It just was running.
I
down
just
the
learned what Okta was.
Five Below is down 10%, apparently. That's actually
Oh,
surprising.
really?
I was expecting, yeah, it's down. Yeah, oh my goodness, it's down quite a bit. I was expecting Five Below actually to do quite well, given the way that the retail space has been doing. It's kind of surprising.
Yeah, that is surprising. I was actually interested to see what that would do. What's the ticker symbol for Five Below? 5?
Yeah.
Okay. See if we got numbers on that.
Yeah, that's tanked big time.
Hey, good news. The dividend bot now always enters with 100% of capital.
Hey.
Good news for the dividend bot holders. All
Yeah.
right, so looks like Five Below beat earnings estimates. Earnings per share $1.11 with the estimates. Came in at $1.15. They missed on revenue slightly. Estimates were 646.93, came in at 646.6, so missed by 300,000. Yeah, and they are not providing guidance for the full year for 2021.
Oh man, yeah, that is just a stock killer, is the guidance part of this. I mean, it's bad enough that they missed on revenue, which honestly, if you come in line, you might as well miss. But it's the guidance is certainly a big deal. We get this question all the time. People ask us, if a stock beats earnings, why does it go down? And this is one of the biggest reasons as to why. It's always has to do with the guidance, the forward-looking, potential for a company or the stock itself. They come in and don't give any. That leaves a lot of questions to be answered, and the market doesn't like uncertainty. So, not surprising to see the huge sell-off here after hours on Five Below.
Yeah. All right. I'm gonna pull up. So, guys, we'll check out the other earnings. Chewy will be interesting. Obviously, you mentioned Asana, which we're both excited about. Are any of those moving yet?
Yeah, Chewy is also down 9% right now after hours. Pretty decent drop off there. Here's the big shocker, Fat Man Zoom. Asana's up 5%. After the massive run that Asana's had, it is now up 5%, over $81.50. What an absolute monster this thing is.
I don't have the earnings per share yet for Chewy, but they did miss on revenue. Estimates were 2.2 billion, came in at 2.16 billion. They also missed on EBITDA, pretty large. So pretty large gap here, 34.8 million on EBITDA. Came in at 23.3 million. Man, they got hammered.
That was on Chewy.
Yeah, that was on Chewy. Let's check out Asana.
It is still ripping, bro. Asana is up 8.5% at all-time highs and continuing the climb here, sitting at 84.78. What an absolute monster this thing is.
That is. I mean, they're just so much better than their competitors.
Yeah,
like,
they really are.
Just are.
We're personal users of Asana, and we just love the product itself. If you asked me that Asana would beat earnings and it'd be up 10% after hours after having the move that it had already this year, I would tell you you're nuts. But yet here we are. It is now up 9% after hours. What a move from this company. Just unbelievable.
Yeah, I mean, Asana is almost like the new Zoom. I mean, their growth is really incredible. Not to the same level, but they raised their fiscal 2022 revenue outlook. That's always good. Second quarter revenue growth grew by 72% year over year. And we're comparing it to pandemic levels, right? Revenues from customers spending 5,000 or more annualized grew 97% year over year. I mean, these numbers are incredible.
Yeah. Some people are asking what Asana is. Don is asking what it was too. Asana is what would you classify it as? A project management? Software as a service.
Yeah, workflow management.
Yeah. And so we work with our video editors through Asana. I mean, we do all kinds of stuff through Asana. It's just a really great company. And so this actually plays in line with the work from home as well. So if you're working from home, I mean, Fat Man Zoom and I are always in different areas. Our video editors live in California. So like you're able to kind of like organize your workload and your projects with anybody from around the globe. And Asana does a really, really good job at that.
Yeah, I mean, it's part of the team collaboration suite. You know, it started out with marketers and sort of like a marketing planning platform. And it's just grown to be a team collaboration tool. It's what Slack wanted to be. The reality is it accomplishes what Slack has tried to achieve. And really Slack just has never been able to do it. I know I'm going to get some heat from those Slack lovers out there. Trello came close. It was just a better Trello for those of you, Atlassian, those of you who like that company. Asana, far and away better than Slack, far and away better than Trello. And then you got a couple of little guys out there. They just help you work with your team even better. And you've talked in the past about email, the sort of like the extinction of email. While I don't know if that happens, if it does, Asana would be the one to take over.
Yeah, I agree.
Or that model, the way it looks.
Yep, absolutely.
So the earnings per share were, they did beat, it was a slight beat. Loss of 26 cents was an estimate. Loss of 23 cents it came in at. Revenue, 82.39 million were estimates, came in at 89.5. So beat on both. Here's a word of caution though. They're also not profitable. Let's not forget that. And you're talking about 89 million in revenue. That's just not a lot. It's just not a lot. And so while they can grow quickly, it can impact them really well. That's great. If things take a turn for a worse, you can see an incredible downward move that I wouldn't want to be in it for. Do you know the market cap on it offhand?
I was just looking it up because I knew the question was coming. Let me see. Oh, of course it was acting up. It's actually pretty low if I'm not mistaken. Even though the stock price is up, and this is why share structure is important and understanding the share structure, folks. If you're not familiar with how outstanding shares and all that stuff works, sometimes the price doesn't necessarily matter. We have to look at PE and market cap. Yeah, the market cap's only 13.9 billion right now.
Okay,
so it's still tiny relative to the amount of money that it's bringing in. So this does have room to go up. And we'll see. I mean, like you said, they're still operating at a loss. So if we see a rise in interest rates, we see the 10-year go up. You know, the most vulnerable stocks are the ones that are operating at a loss or high multiple tech. I'm not so sure that Asana here would be necessarily classified as high multiple tech just yet, but I think it's getting there for sure. And you can make the argument that it's getting ahead of itself. But right now, even with the revenue that they're bringing in and the market, looking at the market cap, it's actually not that crazy.
Yeah, I'm trying to look at, and I'm sure Atlassian is much, much bigger.
Yeah.
Let me pull it up real quick. So the market cap for them is 93 billion. Now they have a lot. Asana is sort of a standalone. Atlassian has a bunch of companies underneath the umbrella.
Yeah.
I don't know. I'll actually pull this up, but their market cap's almost 100 billion. However, to compare apples to apples, when we talked about Asana bringing less than $100 million in revenue, I think I'm at 1.6 billion.
Yeah.
So for Atlassian, try to pull their last quarter for their earnings. One thing to keep in mind. Oh shoot, I just lost it. Of course, both our things shit the bed.
That's okay.
Hold on. Give me 3 seconds for this to load here.
Okay.
Okay, here we go. So, and I'm not saying I'm against team. I'm not saying I'm against the company.
Yeah.
Because they consistently beat, and they do obviously have revenue diversification. But so their last quarter revenue was almost 600 million. So there you go. You know what I'm saying? Like,
yeah.
So, remains to be seen. However, I think if you see a slowdown in growth, you can see some challenges. That'll change quickly. So
yeah, I think that actually enforces the argument that Asana is actually not overvalued yet. Though you compare the size of the market cap to team as with the amount of revenue they're bringing in, and you kind of bring that down to Asana's level, they're almost kind of in line with each other. So it makes sense as to why Asana is all the way up here. Chargepoint though is one that you're in. Is that correct? Isn't that correct, Fat Man Zooms? In the long-term account?
Yes.
It is up 7.5% here after hours. As soon as we get those numbers in, folks, I know a lot of people are excited about it. It looks like there's a lot of folks in Chargepoint. And
finally agreeing on this bad boy.
It's still climbing. It is now up 8.5%. I can't even keep up with it after hours here. As soon as we have those earnings numbers, we'll certainly be able to we'll certainly get those numbers out to you.
Yeah, I think bro. I think you heard me talking to level 3 this morning. My last 3 earnings, we say they're a coin flip, but I have not been a coin flip with earnings. And I feel like lately I've just been getting rung through the ringer. I don't even it's not even like it's even or slightly down. I've been getting demolished on earnings. Yeah. So it's nice to finally win one of these. I'm looking for the numbers. So Chargepoint actually beat on revenue, missed on earnings. Loss of 13 cents a share where the estimates came in at a loss of 29. Revenue beat, estimates were 49 million, came in at 56 million. Revenue guidance raised 15%, which is likely where it's at.
Yeah, so it's up 8% as a result. When companies miss earnings, the saving grace is going to be one of two things. It's going to be how much revenue did they bring in? What's the growth story here? So if they beat revenue estimates, which is good. They came in and raised guidance, which is good. So even though they're still operating at a little bit of a steeper loss, sometimes those two things will more than make up for it. And in this case, it looks like it is for Chargepoint, and it's up 8.5%. After hours. This is one that it's going to be a huge benefactor of the infrastructure bill whenever we get that to go through. That kind of stimulus is going to be something that I think benefits any of the charging station related stocks. Blink comes to mind as well. ChargePoint certainly in that conversation. Obviously, Tesla, anything that's EV related is going to do really well. And this thing is still climbing. Fat Man Zoom is now up over 9% after hours.
I love it, baby. I love it. I love it when a position turns to green. It's a great feeling. But there's a
Absolutely.
lot of room to run for this. I mean, I said it at the beginning of the live stream. It's set up to potentially go off, and when you look at it, it was from an asymmetrical perspective. It looked like it had great upside. It was sitting right around a support, had been beaten down. But when you think about everything going on as far as tailwinds and catalysts, you know, everybody wants to talk about EVs. The
Yeah.
reality is, I'd rather be in the charging game.
Yeah.
I mean, Tesla's my largest position. Don't get me wrong, I love
Yep.
Tesla, but like they face far more challenges than like, hey, let's build some charging stations and let's like get them out there.
Bro. Yeah.
It's an uphill battle.
100%. By the way, ChargePoint's now up 10% after hours. One of the, I guess, cliches that, comes to mind here is, the gold rush in California way back in the day. Everybody was chasing the actual material gold, which they thought was going to be the cash cow. While the guy making the shovels and picks was the one that was raking in all the money. And that's kind of what ChargePoint's doing. He's the shovel maker, or they are the shovel maker at this point. So, not to say that Tesla isn't going to continue to just absolutely crush it, but you get what I'm trying to say. Like, this is certainly something that they're going to benefit greatly from. I mean, think about how many gas stations there are out there and just replace them with charging stations. And ChargePoint is a leader in this sector. So, yeah, man, it's going to take some patience, and we're going to continue to see volatility. We come out to the daily chart, and you can see that that's very obvious. I mean, at the end of the day, they're still operating at a loss, so there's going to be some of this volatility, but this is a huge move. It's now up 13% after hours. ChargePoint.
Wow, this is beautiful. This is beautiful.
Talk about a boner candle, man.
Yeah, I'm up currently. It just keeps rolling, man. It just keeps rolling.
It's still going up.
In my position, I'm up 8% now for my total position. I was 2/3 full position size. Again, here's an example of I was scaling in on a dip. I was going to add full position. It didn't happen, but I am so happy with my gains, and I'm fine with that.
Yeah,
I don't need to be in full position.
absolutely.
Takes up about 7% of my long-term portfolio.
I mean, and that's still a big chunk for something that's so speculative like ChargePoint. Even though we have a lot of conviction on it, it's still speculative at the end of the day. So I think that's just fine. C3 AI had earnings today too. I don't know what they're doing. It looks like it's down. Felix was asking about AI earnings, C3 AI. I need to like figure out a system on how to do this a little bit better. But C3 AI is actually down 3% right now.
Do it how? What do you mean?
Oh, when people like ask questions in the chat, this nice new little feature that I figured out.
Oh, gotcha.
About like having their questions show up in the screen. But yeah, C3 AI right now is down 4%, not looking good there. Okta also down 4.5%. We got Chewy that's still coming down over 11% after hours. Five Below still shit in the bed here. And then Asana is actually flat and after hours trading. The only other thing that I think we haven't covered yet is Smith & Wesson, and that's actually red after hours too, looking like it's trying to climb its way back or claw its way back.
I have real quick. I have Okta's earnings. They beat loss of 35 cents where the estimates came in a loss of 11. Sales beat, revenue beat 296.5 million where the estimates came in at 316 million. Solid beat on that.
Yeah, pretty good beat. It is actually down 4.5% after hours right now. And I wanted to revisit this. This is actually a really good point that Brian brings up. I wanted to get your thoughts on this, Fat Man Zoom, because I have thoughts about it too. It says the fossil fuel industry is the largest in the world, and this is going to change everything. Going back to the ChargePoint conversation, and I agree with you. However, the fossil fuel industry is what's going to get us to that next step, and that's why I actually I'm invested in OIH and really just having exposure to the energy sector. Long term, by the time we're ready to retire, I don't know if I'm going to want any part of anything related to fossil fuels, but I think at least in the medium term, we're going to need them to get us to that renewable, I guess, utopia that everybody's trying to get to. What do you think about that, Batman Zoom?
I agree, man. I agree. I think that there's a place in the space for continued growth and opportunity. And not only looking through the lens of superpowers, but
Yeah.
looking at all the other countries in the world that are so far from like EVs. It's like considering
Right.
their needs. And so, I know everybody wants to move straight towards, 100% renewable energy and EVs and focus on that. The reality is there's still a place for fossil fuels for a long time.
It is mind blowing to think that, we've been talking about EVs for what seems like forever, but we're still very much in the first inning. Like it's not even
Yeah.
close. Not even close.
But by the way, real quick, since we're kind of talking about EVs, William Vasquez posed something interesting, which is what if Tesla bought Chargepoint, which I really like where your head's at. I would say I think that's unlikely, but I think considering who would buy Chargepoint is very, very reasonable to consider. What I'll say, the reason why I wouldn't put Tesla as that company is, one, because they very much like to do their own thing, do it in-house, build it. And they also have so much going on that hasn't been released that their cash needs to be put towards ramping up, creating new lines, doing all that other stuff. But if you look at companies that have been around, you could look at companies like GM is making a huge investment towards EVs. Obviously you like Ford. Looking at those companies that they're trying to build an EV, well, let's go out and buy a charging station company, and that will help us bridge the gap. That makes sense. But don't sleep on companies like BP or Chevron or ExxonMobil that have, first of all, they have physical spaces, and they already have the infrastructure out there. They have the cash on hand. They could still be in oil and also be an EV, but BP is one that comes to mind as a very logical opportunity. ChargePoint has tremendous exposure in Europe, and they have cash, and they want to move towards more renewable energy. So don't discount those type of companies as well.
I love that. I love that angle. When you think about companies that could potentially buy up something like a ChargePoint, the automakers is like the first obviously reaction, but thinking about just the energy companies in general, and you brought up BP looking to become carbon neutral, which seems like an oxymoron. I think that could certainly be a way that they end up achieving that. Yeah, I mean that makes a ton of sense. Did I lose you? I think I lost him. Anyways, Fat Man Zoom brought up a really great point as far as that's concerned. I think that's an excellent argument that you can make for something like ChargePoint being a potential merger candidate. Right now, it's actually continuing to climb here after hours. We have yet to have experienced a green or a red candle here on the 5-minute chart. It's still climbing, now up 12.5%. This looks great. I would say that this is probably the big winner of the day. If you guys are just tuning in, we're covering other stocks as well as far as earnings are concerned. Smith & Wesson came in and reported they're down 2.29%. Don't have the official numbers on those just yet. C3 AI is actually continuing to sell off. I know a lot of you guys were interested in that one, and it is down 7.5%. ChargePoint, obviously, that we just talked about, up 12.5%. Okta came in and beat earnings and on revenue. But this doesn't look like it's something that may last very long. So this is down 4.5%. Looks like it could potentially be an opportunity here. I believe they also raised guidance. This actually looks like a pretty decent opportunity. Not so much here for Chewy. Chewy actually ended up selling off significantly here. Now it's down 11%. Might have to wait to see if this actually ends up slowing down as far as the selling is concerned. Ugh, looks pretty ugly there. And then Five Below came in and kind of shit the bed as well. In a time where retail is absolutely crushing it, Five Below doesn't even give guidance, and that's why this actually sold off. That's absolutely mind-blowing to me. I don't know who the leadership is there, but they should be fired at this point. The retail space has been on absolute fire. Americans have been spending money like crazy over the summer on a lot of the retailers that we've already covered, like Under Armour and Nike and Macy's and Kohl's. I mean, you name it, a big box store that has stuff to buy it in, and people are going out and buying it. for Five Below not to give guidance, that's just absolutely mind-blowing to me. I did see somebody donate to the channel. Hold on real quick. Let me scroll back here and see if I can find it. Let's see. Oh no, I lost. Oh, here we go. Super Kal-El says, donated $5. Thanks for the donations. This awesome channel. What's your prediction for ChargePoint earnings report and price tomorrow opening? Well, we already covered the earnings. Tomorrow, I think right now it's trading at still up 12.5%. I wouldn't be surprised if this opened above 25. Wouldn't be a surprise for me at all. Fatman Zoom says he's back. I don't see him. I don't see him, big guy. Let me go back to not sharing my screen. Yeah, I don't see him, man. It's all good. So see a lot of you guys hanging out. So I think that's probably going to just go ahead and do it for us today. Again, we certainly would appreciate it if you guys wouldn't mind hitting that like button. We got up to 180 of you guys hanging out here in the live stream today. We'll be back tomorrow. Tomorrow we're going to be covering DocuSign, which is going to be a big earnings call for tomorrow, and we'll give you some other stuff as far as what we're looking forward to for the month of September as well. Also be on the lookout. Don Fry came in and gave us some pretty good insights on stuff that he's watching for the top stocks in September. That video will be coming out later this week as well. So if you're not subscribed already, make sure you consider doing that and then hitting that notification bell so you get notified when we go live tomorrow at 3:30 p.m. And that's going to do it for us, guys. Thanks so much for tuning in. We'll see you tomorrow. As always, B. Smith is out. Bye.